Welcome to Zen and the Art of Real Estate Investing, one of the fastest growing real estate investing podcasts in the world. What if you could learn from experienced real estate investors? Find out what got them to where they are now. Get insight into their daily habits and take these insights to inspire your own growth. Each episode, Jonathan Greene shares an in-depth look at the mindful approach to real estate investing. Jonathan is a lifelong real estate investor and the founder of Streamline, a data-driven, investor-friendly, independent real estate brokerage located in Madison, New Jersey. Whether you're looking to start from scratch, get to the next level, or just for a straightforward and honest approach to real estate investing, this is the free mentorship program you can take with you anywhere. Now, here's Jonathan.
Welcome back to another episode of Zen and the Art of Real Estate Investing. I've got a solo show for you today, and I know I've done a lot of them. I'd love your feedback. You can just go onto the website, zenandtheartofrealestateinvesting.com, and go to the contact page and let me know. Do you like the solo episodes? We're trying to work in more, but we're also working on a lot more guests. Today we're talking about local. And what I've always believed is the title of this show. Everything you really need to know about real estate is local. And I'm telling you right now, this does not just apply to brand new investors. This is for everybody, and it's not just for one asset class. I talk about all of the asset classes and why local is so important. This is honestly one of the favorite shows of mine that I've done because I think it can help everybody right now. This is episode 341 of Zen and the Art of Real Estate Investing. And I'm coming at you with a solo show, and today we're talking about everything you really need to know about real estate is local. That's the title, and it's been my position the entire time that I've been in real estate. That doesn't mean that you can only invest locally, as I'll get into. What it means is that everything that is tied to your real estate investments is likely tied to something local. We're going to start with single family homes, the most obvious, and multifamily, small multifamily, get to apartments. Then we're going to go up into commercial assets and just talk about the locality of it all. I do believe in a diversified portfolio overall, and I believe geographic diversification is also smart, but that doesn't mean that each one of those doesn't have local properties that makes it a better option for you to invest in than maybe another area. So a lot of people think they can just read things about top 10 lists and figure it out, but there's a lot more that goes into it. I would submit to you before we even get going with this episode that you would do better as a real estate investor if you spent the same amount of time just studying one real estate market as if you just studied one asset class. So let's just compare whatever, let's just say Jacksonville, Florida, and you spend 3 months just studying Jacksonville, Florida real estate, all kinds, single families, multifamilies, commercial. You start looking at all options. You're going to start researching migration trends, looking for businesses that are growing, things that are depleting. So you understand the locality of Jacksonville. Now you compare that 3 months with just 3 months learning about self-storage. I think you would still do better learning about Jacksonville and then investing in a property where you could find from local data and your own local research, including if you're living there, it's your personal kind of driving for dollars that you can figure stuff out. I think you're going to make a better investment by knowing more about the location than you will about the asset class. Now, maybe that's not the way that you have to stay your entire real estate investing career. You're going to get out there. You want to learn about different things. But I think locality is much more important than people think. A lot of us grow up investing where we live, but of course, it's very expensive in some places that we live. Los Angeles is obviously one of them, very tough to invest there. I live in northern to mid, I'm a little bit further out from northern, but northern New Jersey, very hard to invest in as well. The returns are not like they would be in the Midwest or maybe the South. So you have to consider other options. But I still think if you live in a very hot market somewhere around Los Angeles and you just study the intricacies of that market, I think you may have a better time finding something that is investable by knowing everything that's going on there instead of doing it the other way, like I said, which is just learning about asset classes or taking a course on something so you know the basics of how to flip a house, but you still don't know the geography on how to buy a house. I grew up as a single family investor, and my best investments generally over the course of my life, probably up until now, where I think my syndications are going to be really good. My best investments were on houses that I lived in, and I was a very good home buyer because I understood local, and I researched it, and I watched it, and I drove around all the time. I looked for things that were emerging. I still do. I'm always looking for the break of neighborhoods where something cool is happening to see if that's going to be the next place. And remember, you can talk about big cities. If you just take near me, if I live not near, but in proximity to Newark, which is a huge city, and people can go pro or con on Newark, but Newark has like 15 different zip codes. It's huge. Los Angeles is huge. There's so many submarkets available that you can still try to learn about those. And then maybe it does take you to a different market. But again, I'm trying to compare locality with asset. And I think I called myself an asset hunter for so long, but maybe I'm really just a local expert who does well in different asset classes because I've owned a lot of different asset classes. And I think that's part of the fun of real estate, especially when you're getting going. I think a lot of people are bent and just hell bent on single family or buying a condo or buying a townhouse when there's probably a better deal on a mixed use property that you could house hack. These are things that people don't think of it, but you only understand that if you understand how the local businesses work, how the local real estate market works. So let's back into it from there. We'll start with your traditional single family home sales, condos, townhouses, and small multifamily residential, 4 units and under. What are you going to get better bang for your buck? Learning every single thing you can about one town in your area, or just learning everything about how to own a rental property? You could punch that into ChatGPT and it'll give you a pretty good overview. It will certainly not teach you everything. It won't tell you how to smell mold. It won't tell you, how to do a lot of things. Well, it probably will, but it won't be able to do the physical things that you could do, checking roofs, things like that. Probably going to tell you what you can look for. But I think if you spend all the time driving every block, especially if you live in a small town, knowing every block, going back to the principles of driving for dollars, growing up, this is what I did with my dad. You can still drive for dollars locally. You just get in your car or you hop on a bicycle or you take a walk. And every time I'm ever walking anywhere in any town, anywhere, any place, any country, I'm always looking at houses. I'm always looking at real estate, and I'm looking for the core principles that we used to look for driving and walking for dollars. They're the typical things that you'll see pull up in, like, if you use Deal Machine, you can see which buttons you can press and open up to find these things when you're making notes about the properties. High grass. Yep. Broken windows. Yep. Bad roofs in disrepair. Clear leaks through the roof. Cars on blocks. Yards that are never done. So not just high grass, but leaves everywhere well after the leaves should be gone. Snow that's not removed. All of these things are indicators. You walk the same route every day and you never see a car there. These are indicators of vacant properties or properties that have been left. You go back, you do your research, you see if the owner of that property lives in that property. Usually it's a hard no. Once you see it's a hard no, you see how far away do they live? Because again, this is going to go back to local. If the property owner isn't local, they have less of a tie to the property. The farther away that they are from the property, depending on how many they own, the more likely you are able to acquire it. That's just in general. There's obviously a million different things that could come up. But if I'm looking in New Jersey and I source out one property in Bloomfield, New Jersey, and it's owned by somebody who lives in Oregon and they don't own any other properties in New Jersey, I'm going to spend all my time just calling on that property because they don't need it. Why would they need it? It's too far away. They're probably paying property management on it. It doesn't make any sense. So these all go into kind of the letters that I write, the personal touch, but this is what local real estate is about. And it's why local is more important than asset, in my opinion. Because if you drive your whole town and then you see where the multifamily blocks are, because obviously there's zoning. So you're going to have traditional single family zoning. Then you're going to have zoning that allows multifamilies. Then you're going to have zoning that also allows commercial. So that's where your mixed use is going to be. Now you start to understand where the properties break, what kind of opportunities are there. When you're looking for multifamilies, it's pretty easy. You're looking for 2 doors sometimes on the front. That'll tip you off. If you can see the side of the building, you can see how many, either gas or anything on the outside waters going in. And those are, again, tip-offs, how many compressors there are for AC units. There's a lot of ways that you can determine multifamilies, and then you can just start figuring it out. The more you know about the neighborhood, the more of a local potential investor you are for those people who want to sell there, because you know more about the area. I've always said that the best wholesalers are never wholesalers. They're local home buyers who get so good in the local area, whether they live there or not, that they can tell you, oh, I know your neighbor. I know that person down the street. I know that block. That's why I have a lot of trouble thinking that VAs who don't live anywhere near the area can do well on the phone with people who are trying to sell to a local investor. Local is important. You can learn local. You can live in Los Angeles and just decide that you want to invest in Evansville, Indiana. And all you do is research stuff. You can do Google Street View. It's going to be outdated, but you can start learning things about the nooks and crannies. You take a trip there. These are great ways to do it. And you can go back to one of my core principles of figuring out where you want to invest. You're going to make that list, all the places you've ever lived, all the places where your friends and family that you like live. And then you're going to see what you like about those, if there's crossover there. And then you're going to look into those lists that you're always reading, that come out on Bigger Pockets or in US News and World Report, or they come out on Zillow. And you're going to see if there's any crossover from hot investor markets to your list, because then you have a competitive advantage. You have boots on the ground, or you have personal experience in the area, which makes you a better local option. And you will be able to beat out virtual investors that way. The more you know about the neighborhood gives you more pull if you're a good negotiator and a good speaker, and you really can be honest about why you're trying to get the properties. So single families, multifamilies, small mixed use, very, very important to be understanding the local dynamics, which way they're going. One of the best ways to do that is to sit in on city meetings, planning boards, see what's going on. I guarantee you, if you go to 6 months of planning board meetings, you'll know more than every real estate investor in your area. You'll know where they're allowing developments. If you find out that they just approved a 50-unit condo, and then there's a mixed use with like a grocery store there, and the grocery store's, solid, but might want to do better, that could be a solid tenant if you pick up that mixed use. Your rental wouldn't compete with high-end apartments, so you can kind of balance that out there. There's just a lot of things that you can learn from local that will help you. And that's understanding, where the blocks curve. And when you're driving blocks, what I like to see, am I on a very consistent block? Are all of these houses built around the same time? Are they around the same size, but for people who've had the opportunity to expand? But when you're talking closer to downtowns, you're going to have pretty small lots, 0.10 to 0.15 lots. They can't really expand that much. Maybe they can go up if they're lucky. But these are things that you want to know to start interpreting the data that you also pull to match up with the areas that you're driving or looking at local, or if you're even virtually looking at them local. So those are your standard investments: single families, condos, townhouses, small multifamily, 4 units and under, mixed use, which again, you can house hack if the square footage is more residential total than the commercial. These are great options where I can't imagine you can just learn about something more that will help you more than understanding the city or the town. I live in a small town. I think I could learn this whole town in like a week. And then I go back and I go on the website. You can find old planning board meetings. You can find out, again, what's getting approved. These are ways to stay ahead of the curve, especially when you don't want to spend a lot of money on research. You don't want to buy a list, and you don't want to send, 15,000 postcards. You don't have to do that to succeed. If you get good at understanding the local market, it will help you as an investor. If you also have a real estate license, you're going to be in great shape. I tell all of my real estate agents at my brokerage, and as I did when I had a big team, that if all you do for the next 30 days is look at every house that went on the market, every house that went under contract, every house that sold in that area, you'll know more than 99% of the realtors. You'll have an answer to any question when somebody asks about real estate in the area, you'll know. And you can actually do that similar research by going on Zillow or Redfin every day. If you're just a curious investor, you set up the alerts so it sends you everything that goes into those statuses, and you will know so much. You'll have a great conversational topic for anyone who wants to talk real estate. If you just start going to meetups, now you know a lot about one area. I'd rather be an expert than a generalist in this. And if you're just learning and you take a house flipping course, it doesn't mean that's going to help you make the right buy in your area. I'm sure there's a lot of tips and good house flipping courses on how to get the property, but in each locale in the United States, your costs of construction are going to be different. Your opportunities for contractors are going to be different. Your price to value ratio is going to be different. Everything is going to be different. The way your market is pushing buyer or seller inventory is going to be different. So this is why understanding local and then going into the local market and seeing what's available. Maybe you don't think you can be a small commercial investor, but when you look through everything in the local area, that's where the best options are. Then maybe you're still not sure. So you talk to someone who's invested in commercial. You just start to do a little bit more research. You want to be able to find the opportunities instead of chasing the herd. I always say when everybody's going one way, I prefer to go another. And that's how you find the best deals. But you have to be well researched in order to do that, or you're just throwing darts. Hey, it's Jonathan. I hope you're enjoying this solo episode about why I believe local is the most important thing for you to know in real estate. I really hope it's hitting home. I really enjoyed making this episode, and I hope you're enjoying it too. One thing I want to mention in the middle of this episode is that I've never been one for telling you to follow, like, share. I mean, I talked about sharing here and there because I think that's a good way, but that's just not my thing. If you like the podcast, I just appreciate you. I'm glad that you listen. I hope you take some of the things that you hear from myself and some of the guests and you just put it into play. Because one of the hardest things to do in real estate is taking action. You can't do it just by listening to the podcast. You have to get to in-person meetups. You have to know other real estate investors so you can see people who have similar life circumstances to you and they're one step ahead. So I hope you combine podcasts, books, and in-person real relationships. Let's get back to the show. So when I talk local a lot, people start saying, oh, well, that's not how it works for syndication, or it's not how it works if you want to get a 250 unit. And I completely disagree. I think your local reports and data, statistics, everything that you're going to look at, the demographic data, the migration trends, all super important to larger scale. Let's go a little off the map and even let's just say self-storage. So I've done so many self-storage shows. I love talking self-storage because I just think it's a great business. But if you're talking self-storage, one of the most important parts of understanding self-storage outside of the mechanics of the business is what are the driving statistics of the area? How many cars are going by the self-storage facility per month, per year? These are huge things. Guess what? That's local data. It's not like, if you're on a highway, then it could be, pass-through traffic, but generally you're looking for just how many eyes are getting on these properties. And that means that's local data. That applies directly to self-storage. You also want to look at what the home sales look like in the area. What the condo and townhouse sales. Are people downsizing more than they used to? Storage comes in handy for people who are upsizing and downsizing. That's why I think it's, pretty much recession resilient. But these are local pieces of data that will really help you if you're operating self-storage. And then locally, what do you want to do? You're not going to go look at the statistics for self-storage across the country. You're going to look at your 8 competitors that are right around you in self-storage facilities. Do you understand now why local is so important and why you could take a self-storage class, which there's a lot of good ones. I know we've had a lot of great people on the show, and you can learn about self-storage. But if you don't know your local market and how self-storage works in your market, you're going to fail. The local part is the thing that gets overlooked. Are you watching any long 1 hour videos on people talking about the local nature of real estate? I haven't seen it. That's why I did this episode. And again, I hope these solo episodes are helpful. I'm actually enjoying them more. As you can probably tell, I don't walk in with a script. For this one, I literally have nothing on my screen. A lot of people just say I'm like a wind up doll. I just turn myself and I go. And I love real estate. I love talking about real estate. And I like local. I like walking through my own town. I like learning about adjoining towns. It's just fun for me. And I think if real estate's not fun for you and you don't want to nerd out on local data, you're probably going to make a mistake because you're trusting other people to forecast your future. And personally, I'm not into that. So that was, self-storage example. Let's talk about apartment buildings. I mean, if you're talking about apartment buildings, say you buy a 12-plex in your town, one, same as self-storage, you're going to judge it against the other apartment rents in the area. Are those apartments more upgraded than yours? This is all a local decision. Where does your apartment building fall with the other 10 to 15 units in the area? How's your upkeep? What's the year of the build? Do they have more amenities or less amenities than you? That's not something you learn in an apartment class. You learn about how to transact apartments, but you don't really learn about how to, well, actually, you probably do learn about how to, check against other ones in your area, but I still think that it's overlooked. You're going to look at that same jobs data for your local area. What's the median income for your area and for your area, and does that bode well for the rents that you're hoping to get? Or did somebody float you a pro forma that looks good but doesn't match up to the economics of the area? You can take a place like Philadelphia. Block by block, Philadelphia can change dramatically. So within the same zip code, you can have a dramatic economics with a higher employment income, like to the left, and then to the right, you could be down 20,000, which really will affect your tenancy. And that's inside the same zip code. For anybody who thinks real estate's not local, this is it. That's why I don't agree with looking at real estate news nationally or the headlines. That's just clickbait. I mean, everything's clickbait now. This show isn't. This is literally giving you a blueprint to figure out how to invest smartly. And I'm telling you, spend your time on local demographics, local data, and learning a single market. I just think you're going to do better like that. If you know for your whole life that you want to get an investment property, let's just say Austin, Texas. Actually, you have an option there now. And multifamily operators are doing a lot there, giving away a lot of rent. But if that's a place you've always wanted to be, then just own that market in terms of studying it, know everything, and eventually you're going to crash into a deal, especially if you're building relationships in the area as well. Again, whether you live there or whether you're virtual, you can still do the enormous amount of research on that, instead of taking a class on how to flip a house. It seems like a no-brainer to me, but I just never really heard that much about people talking about this that much. I've talked about it definitely with a lot of guests on the program who just have focused local as well. But it doesn't mean you can't be a diversified investor. I'm just saying when you're trying to figure out, and this is the mindful approach to real estate investing, where to spend your time, I think I'm trending to telling you to just put it into the local market that you want to invest in the most, and see all the different asset classes that are out there. Get a partner if you need to figure out operations. But if you focus locally, you'll be able to have more options out there instead of saying like, I only want to buy a 2-bed, 1-bath single family for under $250 in a market, and that's just not available. And you're like, oh, well, I'll just wait it out. And then you're sitting on the sidelines for 3.5 years waiting for that. And then when it comes out, other people want it. So you can selectively, by focusing local, find things that maybe you catch before other people because you're paying attention to everything that's happening in the area, the stuff that other people don't know about. Let's talk about industrial. Industrial is interesting. I mean, to me, that relies a lot on who's coming in and out. So that's going to be another traffic pattern. What's needed in the local area in terms of industrial? Is this going to be industrial flex space, outdoor industrial? Is this going to be one of these kind of new, what started as industrial? Now it's kind of like a hybrid mall of sorts with the trampoline parks and, putt-putt, go-karts. Those are great uses. And you can start to figure out, hey, how far away is something like this from here? And if you see that the next, whatever indoor golf center is 33 miles away, that could be a good business. And renting out industrial space is not that expensive comparatively. So if you're thinking business wise, also, here comes some options for you. That's industrial. Even when I'm talking syndications, which that's what I invest in now at my age, the locality of each investment from you was super important. If you've been a listener of the podcast, you probably know I'm in two multifamily syndications in Chicago. I'm in one multifamily syndication in Madison, Wisconsin, and I'm in one multifamily syndication in the DFW, Dallas, outside of Dallas. And then my fifth syndication investment is in a wellness hotel in Palm Springs. So I'm geographically diversified across those 4 markets and 5 opportunities. But guess what? Those are all markets that I was interested in. I've been to Chicago. I like it. I've studied the metrics on Chicago for several years. Even when people were like down on Chicago, it always performed in terms of rent. So Chicago was, great. Just so happened operators knew everything about the area. So it's a great fit. Then when it came to Madison, Wisconsin, I've always liked Wisconsin. I'm in the middle of watching this Top Chef season from like 3 seasons ago in Madison. That place looks pretty cool. I mean, I want to go visit there because I feel like I could if it wasn't so cold in the winter, that'd be a place I would be interested in living someday. It just seems cool. It's always ranked high in the most healthy places to live, a lot of trails. So that's a great fit for me. And again, they had experience in the area. Dallas. Have I been to Dallas? I've been to Austin. I've probably been to other parts of Texas, but I like having some exposure to Texas. It's a humongous state. Dallas is huge. It's like a country on its own. I like the demographics of the rentership in Dallas. And my guys knew the DFW, and they're doing well when a lot of people are doing poorly. So I really like watching that investment because it performs a little differently. It's more units than my other multifamilies. My other multifamilies are all like 50-ish units, and this one's like 250. So it's interesting to watch those. And then Palm Springs is a place that I've been. I know that it's an enclave outside of LA. I kind of like the demographics of the area, and I like what these wellness hotel operators are doing. They did it once, and now they're doing it again. And so again, it's another local market that I'm interested. And when I'm reading the pro formas on all of these, I read a lot about the local data. So just because you're investing in a syndication, that doesn't mean that you shouldn't be up to date on local. Like if someone brings to you a multifamily investment and the pro forma looks sweet, it's guaranteeing, some fake 30% IRR. And let's just say it's in Provo, Utah, and you've never even been to Utah. That's a hard sell. It's a hard sell, in my opinion. If you're going in on that, I'm worried for you right away. Metrics always look good. Nobody produces a crappy pro forma that looks terrible. You should know that by now. But I would think you want to be at least a little bit interested in the area. Why have I been looking for short-term rentals up in upstate New York? Because I love it up there. I literally love it. I just want to have a weekend house up there. It's a market that I study. I'm also licensed there, which helps me do my agent business up there. But it's a market that I study. I like studying local markets. I think it's fun. I like seeing what sells every day. I like seeing what trades, what goes on the market, how long it sits on the market, if they do a price reduction. These are things that you need to build. If you don't have a real estate license and you're using these as Zillow or Redfin, make your preferences so they work for you. You have to really mess around with it, but you can get reports every day. You can get reports when something's sold. There's a lot of boxes that you can check to deliver yourself data so you can almost, have as much information as the MLS without the agent notes. And I think that will really help you become a much more knowledgeable local investor. Again, remember that you can be a local investor in Texas, even if you live in New York. You can still study that market. I would suggest you should go visit it if you really want to invest there. But, these are markets where you could get 1 or 2. Maybe you decide that's the market for you, but I like geographic diversification. So I think you could do that for a year, get one property, and then you just get obsessed with another market. If something comes up in that first market, hey, you still have all the local knowledge for there. You don't have to reinvent the wheel, but you also probably have a better idea of how you want to buy in the next local market. And one of the cool things that a lot of people have said, it's usually syndicators who say this. So say a syndicator's done well in Chicago, doing multifamily, a lot of times their next market is going to be a market that acts like Chicago. Maybe it's close, maybe it's in Wisconsin, or maybe it's in the Midwest, but maybe the way that the market works, the landlord-tenant laws, maybe they're very similar. Maybe the price points are similar. So if you do that, if you go from, an upstate New York, say you go from somewhere like Rochester actually that's in New York, kind of matches the Midwest a little. Like the deals that you can get in Rochester match a lot of places in the Midwest, and that's in New York. The tenant laws are very different though. Like New York is tenant friendly. Ohio, very landlord friendly. So you can match price points in there and then decide which things you want. But again, you're going to do better if you do a local deep dive. Again, I created this podcast 340 episodes ago as a mindful approach to real estate investing, a way to think different, a way not to just look out at spammy headlines and, to feed into the guru culture and to do all the things that a lot of myself and my guests have done. We've stepped in the shit for you, so you don't have to step in it. And hopefully this show is another way, this specific episode, for you to say, let me reset my priorities as a real estate investor a little. I've been looking on a squirrel. You've been on a squirrel hunt. Do you know what I'm talking about? Shiny object syndrome. Ooh, that's a course. That looks pretty good. Wait, I like self-storage. Wait, I like multifamily. Just pick the market that you really want to own a property in, wherever it is. Maybe it's local, like right next to you. That's awesome. Study your local market for 3 months at least, so you know if there's any opportunities there. You'd be surprised how many mixed use or kind of like weird commercial opportunities come up. I was just looking, something popped up in upstate New York. I sent to one of my best friends and I was like, hey, this place looks awesome. It's like 250,000 commercial space that had a restaurant in it. You could run like art stuff out of there. I remember I was in the art world for 6 years, ran my own galleries. So I like looking at weird stuff. You're not going to have fun as an investor if you just invest in cookie cutter stuff. And even the syndications that I invest in, I like the way they look. I like the way they're transforming the multifamily, and I certainly like the way this wellness hotel is going to turn out. So you have to take preference and also take control of your journey as a real estate investor. You want to be always doing the research, but maybe you're not researching the right things. Maybe your job for the next 3 months, 6 months, 12 months is to pick local markets and go absolutely bananas on local data. That's local data for single families, multifamilies, mixed use, commercial, self-storage in the area, industrial, any type of thing that you want there. You can also say, hey, what is the foreclosure rate in this local area? Is that something that's happening more here? Might I have more foreclosures? Just did a show with Mike Russo from auction.com. How's the auctions part looking here? Are there REOs coming up on auction in this market? There's so much you can do with local, but if you focus on local, you're going to give yourself a wide opportunity to find different things than just a single family house or just a condo, or you decided that you just wanted to house hack. But again, maybe you want a house hack, but don't forget that you can house hack a mixed use. And a mixed use might trade for a lot less than a house hack because you're going to have less competition, because 99% of real estate agents don't know that you can house hack a mixed use if the residential is 50.1% more of the square footage. So just be more creative. Focus locally. If any of you use this philosophy over the next 3 months, hit me up via email. You can send something through the Zen and the Art of Real Estate Investing.com website. Let me know if you did it. I really think this could change the way that you look at real estate if you haven't been thinking local. As always, I really appreciate your time. I hope these solo episodes are a way for you to dial it down. You get a 1-hour episode and a 30-minute episode in the week, even though I did go long on the one about how all my real estate deals fail. But I'm booking away. We've got a lot of people in the hopper. We're bringing back some guests for a second look and a third look that I have fun with, my friends who I just know. I'm going to turn on the mic and have a good conversation. But I really appreciate everybody who listens. We have a great website if you haven't been there, zenandtheartofrealestateinvesting.com. There's a guest directory where you can see every episode from everybody. We're doing some upgrades there as well. My YouTube channel, which houses all of these videos. We used to only do 10-minute clips. Now we're posting the whole things. That's Jonathan Greene, RE. I'm easy to find everywhere else. Trust Greene. Thanks for listening. See you next episode. Thanks for sticking around to the end so you can get a preview of who's coming up on episode 342 of Zen and the Art of Real Estate Investing. It's Julie Thomas. She's the founder of STR Edit. Short-term rental staging and setup. They produce guest-ready design that books. She partners with property managers and STR owners, so get ready for a short-term rental show next episode with Julie.